Bill here with the Metals Minute. Today is Monday, September 19th, 2022. Well, at this moment we have 3 out of the 4 metals higher, and that's an improvement over an hour ago. And so we see the metals beginning to pick up on the issue of inflation. Gold is still at a minus, but there's an interesting thing going on with gold. On the Shanghai exchange in China, there's a roughly 3% premium over what it's trading for in London, the official spot rate. And so we continue to see an arbitrage situation. And just as a reminder, a similar thing was happening back in the 60s and 70s with the London gold pool. And eventually the prices that people were paying outside of the official markets caused the London gold pool to close as it became irrelevant. And I think over time we may see that happen on the LBMA and possibly the COMEX, which incidentally, there's all kinds of metal being drained at a rapid rate from both of those locations, both going to Americans purchasing physical precious metals, and also it's moving east. A lot of the metal is moving towards the Asian economies, and so we see that beginning to play in a more rapid way. And we need to look at it, we don't need to view that as an unfavorable condition. What we should do as Americans, as we see our dollars currently, at the current moment, inflated on the international stage as reflected by the lower gold price, we should take it as the same advantage of that and exchange our dollars for physical precious metals. That's what they're doing in China. We should do the same thing. Eventually that will turn, and the value of the dollar on the international scene, it will reach a point at which it begins to go the other way. And at that point, all the gold that we purchase while the dollars are high on the international scene, that will impact the growing gold price as it goes up. So we have to think differently to benefit from the precious metals, think more internationally. And what we see people doing worldwide, we as Americans should do the same thing, and it will help to protect us going forward. Another issue is we see the rising interest rates, and the 10-year Treasury is up over 3.5%, or right at 3.5%. And there's a lot of discussion about that. Some are saying, well, we haven't seen this since 2011, that rate being at that level. And some are saying, well, but we made it fine when it was that high then, so it shouldn't be a problem now. The issue right now is that we're in a different place than we were in 2011. National debt has more than doubled. It's gone from 14.5 trillion to 31 trillion. So that's where the national debt is more than doubled. But the big impact is on consumer debt that individuals are responsible for. In 2011, it was 3.5 trillion. It's more than quadrupled. Now it's over 16 trillion in consumer debt. So those incremental changes in interest rates, and incidentally, within a 24-hour period, there will be 16 central banks making announcements about interest rates. And many of those are going to be higher, including here in the United States, the Federal Reserve. Consensus is probably be at least a 0.75% increase in interest rates. And that's with consumers holding more than 4 times the amount of debt that we had the last time interest rates were at this level. So what I think will happen is that it's going to make it much harder for a soft landing in the economy. With interest rates rising, costs are rising for people, inflation is still out there. Wage inflation is a sticky type of inflation that doesn't go down that quickly. and it's rising at a pace of 6.7%, the highest in a really long time. So that's building further inflation pressures. Meanwhile, people's debt levels are higher than they used to be. So you can land a plane without the landing gear, but it's a little more bumpy. And I think that's what we'll see. I believe we'll survive it, we'll get through it, but it's going to possibly be a little rougher than what people were expecting over the next course of the next year or two at least. So hold on, purchase more physical metal while you can, while the dollar is high on the international scene, even though it's lower for us Americans when we look at the cost of living. The value of the dollar is decreased. But we have to look beyond that and see that the dollar currently is higher on the international scene, and we should take advantage of that by purchasing physical precious metals while the dollar price is artificially high on an international scale. That's how we can reap the benefit of the current situation. Thanks for tuning in. We'll see you again soon.